Good day. We are going to look at Creditors Reconciliation, where we look at the creditor's ledger must be equal to the statement received from the supplier. The information relates to Kirsten Traders for August 2019. Kirsten Traders buys goods on credit from AMLA suppliers. Use the table provided to indicate the changes that must be made. In the creditor's ledger account, in the books of Kirsten Traders, from our perspective, they are a creditor, which is a liability. The creditor's reconciliation statement, from their perspective, we are a debtor, which is an asset. According to us, we owe them $28,370, and according to them, we owe $25,300. So clearly, there's a difference. Now we need to reconcile. Very important. We are buying from AMLA suppliers and they are selling to us, Kirsten Traders. This is important to understand moving forward. Transaction number A. An invoice for $14,800 was recorded incorrectly as $1,480 on the statement received from the creditor. This means they made a mistake. If they make a mistake, we need to correct it in the creditor's reconciliation statement. And from their perspective, we are a debtor. So they've incorrectly debited our account with $1,480. It is supposed to be $14,800. So they have understated the amount. So step number 1 is calculate the difference, which is $13,320. Step number 2 is find out where do I need to add that $13,320. The easiest is by looking at this T account. The debit side must be equal to the credit side. So the $13,320 must be added to the debit side for it to be equal to $14,800. Please remember, we always need to show what is the effect that this will have on the balance. If the debtors control account is debited, it means it will have a positive effect on the balance. Transaction number B. The bookkeeper of Kirsten Traders recorded an invoice for $1,350 as a credit note. Kirsten Traders is us, which means we need to correct it in our books. What happened here is that we have shown an invoice as a return. Again, I'm going to stress the importance of understanding the basics. You need to know, where would a return be shown in our books? In our books, it will appear on the debit side because we owe them less money. So we have incorrectly shown the $1,350 on the debit side. So to correct this, we need to take it out. And to take it out means that we need to credit the creditor's control account. But by taking it out, we now have only cancelled the transaction. We still need to show that we have bought on credit for $1,350. Again, can you see the importance of understanding what goes where? An invoice means that we owe money to our supplier, which means our debt will increase on the credit side. So when we're correcting this, it means that we need to double the amount. So we need to credit the creditor's control account with $2,700. Please remember always, what effect will it have? By crediting it on to the creditor's control account, it means it will have a positive effect on the balance. I'm going to point this out again. If an account is incorrectly debited, we need to correct it by adding the amount twice. Transaction number C. The discount of $8.50 was in error. It was overstated by $3.50 in the creditor's ledger. This means we made a mistake. We have overstated it by $350. So there's no calculation involved here. They told us we've overstated it by $350. We've shown it as $8.50. We added $3.50 on the debit side. How do I know this is on the debit side? Discount means that we've received discount. We paid less for early settlement of account. So to correct this, we need to take that $350 out. So we need to show it on the credit side. So by taking it out, always remember what effect will that have on the balance. It will have a positive effect. We've overstated the debit side, which means that we owe them more money. By taking that $350 out, it will now reflect the correct amount, which is $850. Transaction number D. An EFT of $7,200 transferred by Kirsten Traders did not appear on the statement due to the statement being processed early. So this is an example of the statement was sent to us by our supplier on a specific date. We need to know how much do we need to pay the supplier by the end of the month. So they need to send the statements early. So any transaction that happened after that means it's reflected in our books, but it does not appear on the statement. This means we will need to show it in the Creditors Reconciliation statement. And from their perspective, we are a debtor. So an EFT means that we've made a payment, which means we owe them less, so they need to credit our account with $7,200. Transaction number E. Goods for $2,700 returned by Kirsten Traders was not recorded, which means we haven't shown it at all. We need to correct it in our books, in the ledger account, and we need to correct it in the reconciliation statement. Goods returned means that we owe less. So in our books, we will debit the creditors control account, and in their books, they will credit the debtors control account. From their perspective, we are a debtor, we owe them less money. So if we've now looked at all the transactions and we've shown the effect that it has on the creditors ledger, on the balance of $28,370, and we've shown it in the creditors reconciliation statement, $25,300, it means that it should balance, the creditors ledger should be equal to the creditors reconciliation statement.